Hello everyone and welcome back to the STP Trading's weekly market update. On the gold chart, considering the structure that has been completed in this range and the start of the bullish trend, we assume wave B is completed in this area. And we expect the bullish trend similar to the previous bullish move in this zone to continue to up to the resistance levels we identified. Based on this, it is expected that the price can stabilize above the trend line and also the 78% level, then move forward toward the previous high. With a breakout above the previous high, which is exactly at the 61.8 level, it can extend up to the 78% as well. Once the price reaches this zone, we expect a correction. And in the next scenario, considering the price behavior at the support area as well as the support trend line, if the price can break through this area strongly, then we can expect a corrective move toward the previous low, and breaking below that would make the continuation of the corrective and bearish trend a likely scenario. On the Euro-USD chart, considering the formation of a triangle pattern in the midterm, we expect a bullish trend, as the price had a sharp reaction in this zone. Taking into account the price behavior at the previous high as well as the 78% level, it is expected that the price can stabilize above this area, and with a stabilization above this level, we can expect a continuation of the bullish trend on the chart, with the 78% level being the appropriate target for the current bullish move. Based on the structure of this bullish pattern, if this scenario plays out, it could easily break above the 78% level and continue the bullish move further. However, if the price strongly breaks below the support zone we identified, the bullish scenario will fail, and we can consider a corrective and bearish trend as the alternative scenario. Next, we have Bitcoin. On the Bitcoin chart, given the structure that formed in this range and the subsequent bearish move that continued down to the previous low, several scenarios could be possible in this zone. In the first scenario, it is expected that the price stabilize above the current support zone here. In this case, with a stabilization above this area, the bullish trend could start. And if the price breaks through the current resistance and the 78% level, we could expect the continuation of the bullish trend toward the next Fibonacci levels. In that case, we can expect the price to form a gradual oscillating bullish trend. However, if the price fails to stabilize above this resistance zone or break below the previous low, we will see a continuation of the corrective trend. Considering the sharp bearish wave that formed in this range, the bullish scenario has become somewhat more difficult and requires a strong stabilization above this zone. Otherwise, a corrective scenario could take shape on this chart. On the Dow Jones chart, based on the triangle pattern we had considered before, and also the completion of wave E in this zone, we witnessed a sharp bullish wave. With the breakout of the resistance area and the resistance trend line, it is expected that we could see a pullback to this zone, after which the continuation of the bullish trend would be the likely scenario. In this part of the chart, the Fibonacci levels we identified, 50% and 62%, can serve as potential targets for this bullish wave. If these levels are broken, the bullish trend could continue. However, if the index falls back below this zone and fails to stabilize above it, the continuation of the corrective and bearish trend would be the likely scenario. I hope you find this analysis helpful. If you do, please don't forget to like and also subscribe. See you next time.